Good evening, everyone. Welcome to Closing Comments here on April 3rd. Another exciting day in the markets. Let's jump into these charts and see what happened. Live cattle today saw a good gap down. Price did briefly get down below 204, but was able to find support and spent the rest of the day balancing out in about a $2.50 range. This was a pretty constructive sign for the bulls in this market. Had we seen a gap down that continued to run lower all day, that would be a little bit more concerning. But given the news that came out and this gap down being supported, that's a pretty bullish sign for this cattle market, being able to stand in the face of all that selling pressure and just hold steady. So good balanced day. That's what we want to see as a bull in this live cattle market. We do see some of these back months losing a little bit more ground, some of them testing the 20-day average, but that 20-day has remained supportive for the past week, and we should continue to see that hold. We could see a little bit more of a pullback here on this front month. Could see the 20-day average trade as well as even down to $2, but at the moment, we do like to see this. We do like the support we're seeing, and the bulls should try and push this thing higher and close the week on a high note and remain in charge. Same story over in the feeders. Gap lower that was supported by the 20-day average here. Front month feeders were a little bit weaker than those back months, with down here to November not quite getting to the 20 and actually closing green for the day, not off of yesterday's close, but green above the open. Like the live cattle, gap lower that is supported and just balances out is a pretty constructive sign for the bulls. Not losing a lot of ground in the face of that sell-off is a pretty positive sign, so should continue to see upside here going forward in the near term across the cattle market. Things are looking good. Corn market today did see a bit of a rally. We did get that overnight gap lower. Price just kind of hung out. The day session opened up right at 450 today and pushed higher back above our bear pivot. Holding price right here in the middle of this range that we're watching, 442 to 470 is going to be kind of the range that we're going to expect to trade sideways here going forward. Bears weren't able to keep this thing lower or try and go push this thing down near 442, so the fact that it was pushed back into the middle of this range makes me think that we could continue to trade sideways here. Switching the bias to more of a neutral bias, we want to see good momentum carry us out at either end of this range that we're carving out at the moment before we get too committed to swing positions in the grain markets here. So expect this thing to keep chopping sideways, and we'll be looking for a clear and close above either one of the ends of this range before we get too comfortable with position trading. Next, we got crude oil. Crude oil had a nice down day today. We were gapping lower yesterday and ended up pushing all the way back down into the mid-60s. Did it in one day. Pretty bearish picture for the crude market at the moment. Should see this downside continue. If we get a break of this 65 to 66 level, we could really see this thing push lower. Oil market is looking pretty heavy here at the moment. However, we have seen this price here between 66 and 72 hold price for quite a while, dating back to last fall. So we'll have to wait and see how we close the week and see what kind of reaction we get here down at the range lows. I do like the bearish momentum, but this market just could take a little bit more time going sideways before we're able to break that downside, bottom end of this range. So, but momentum, big selling day today on high volume is a clear picture that the bears want this thing lower. So. Next up, equity markets. Equity markets saw a pretty rough day today. Indexes being down anywhere from 5 to 6%. After yesterday's tariff talks really shook things up. Next price point from here should see the selling continue. 53.15 is in play on the S&P here. Should see continued downside. Lots of pressure pushing this thing lower. Next up, we got the NASDAQ. Also, lots of downside here. Getting down into about 18.5 is a good area that we like to see here. Dating back anywhere in this range, we've got a nice wide range to mess with, but be looking for more downside in these equity markets. The Dow was just able to close right near that previous swing low. Should see that continue to sell tomorrow as well. Would expect price to be sniffing out 40,000. That good psychological solid level, round number, and some of these prior highs dating back to last year, last summer, and early fall. Markets are looking rough until everyone to remain defensive. There are a few names that are still holding up nicely, but lots of downside. The bulk of the market is losing ground quickly, and encourage everyone to stay defensive and wait for a good tradable low to be put in. It's going to take a little time, and looks like we still got some room to go lower from here. That's all we got for today. We got non-farm payrolls, unemployment rate tomorrow morning before the open, and also Jerome Powell speaking around 11:25 Eastern. Should be cause for more volatility. Be prepared for nice wide swings, big ranges. Encourage everyone to stay defensive as we go into some of those numbers tomorrow, and wait for smoother seas before getting too involved. That's all we got today. Have a good night.